All right, in this lesson, we're going to be looking at the investing activities section of the statement of cash flows. Now, the investing and financing are pretty easy if you understand what's going on in the transaction. If you understand what's going on in the transaction, these two sections are probably the easiest part of the statement of cash flows. So let's get started with understanding the investing section of the statement of cash flows. So to kind of review what we already know, the investing section of the statement of cash flows represents the cash inflows and outflows related to purchases and disposals of long-lived assets and any other investments. We said examples of this would be cash used to purchase or dispose of equipment, cash paid used to purchase investments and securities, cash received for the sale of equipment or sale of investments. And really that right there is everything that you would have to know when you're preparing this section of the statement of cash flow. So at the end of the day, what it looks like from a kind of mechanical picture here is we start with 0. So we'll always start with 0 in this case. And then from here, we're going to subtract any purchases of long-term assets. Why? Because in order to purchase long-term assets, cash has to go out. So we're going to subtract that from this section. Then we're going to add the sale of any long-term assets. Why are we going to add? Well, when we sell a long-term asset, we're going to receive cash. So that brings in cash into the organization, therefore increasing the investing activities section. Then from there, we're going to look at intangibles. If we purchase any intangible, that's going to require us cash to go out. And because of that, we're going to subtract from this section. And then lastly, we're going to add any sales of an intangible asset. So if we sell an intangible asset, we're going to add that because we're going to receive cash in exchange for that intangible assets. By doing all of that, we're going to get our net cash flows provided by or used in the investing activities. Now, it really is going to depend what the company does, but generally speaking, it's always going to be, or for the most part, it's going to be negative because companies are investing in the investing section in their assets in order to produce future revenue. So it wouldn't be a shocker if this is always negative at the end of the day. Companies should be reinvesting in investments in their tangible or intangible assets. So that's just understanding or interpretation of this section. Now, we only include long-term assets which were purchased with cash. So if we don't purchase a long-term asset with cash, then it doesn't go here. We might take a loan in exchange for an asset. There's no cash exchange, that wouldn't go here. But we do have another section where we're going to put it in, which we'll talk about in another lesson. So non-cash exchanges are handled in another lesson. So we're only looking for investment purchases and sales that have to deal with cash. All right. So let's look at an example to help us walk you through what that would look like for the investing section. So assume the following transactions are made by company A. They purchased inventory on account for $225,000. They sold an equipment for $15,000 in cash, received interest from the bank in the amount of $750 cash, purchased a vehicle for $35,000 in cash, sold one of their trademarks for $15,000 in receivables, and purchased a copyright from Company Z for $10,000 in cash. Prepare the investing section of the statement of cash flows. Now, if you notice, there are things on here that don't involve the investing section or have cash as part of the transaction. In those cases, we're going to get rid of them first. So let's look here. Purchase of inventory. If we're purchasing inventory, that's an operating activities. So we're going to scratch that. Why is it? Because we would normally buy inventory to sell inventory to make money on a daily basis. The definition of the operating section. Sold an equipment. That's good. Received interest from the bank in the amount. So that is operating activities. So we'll get rid of that. Just know that. Purchased a vehicle, cash, good. Sold a trademark for receivables, nope, it's got to be cash, so we'll scratch that out. Purchased a copyright from Company Z for $10,000 in cash, good. So all three of those there that are not crossed out are ones that we're going to have to deal with in this investing activities. Why? Because they involve cash and they involve the investing activities section of the statement of cash flows. So now all we're going to do is we're going to put pluses and minuses for those things that we purchased or we sold as part of what we did during the year. So in this case, we'll start with the first one. We sold an equipment for $15,000 cash. So if we sold it, then we received cash of $15,000. So we're going to add equipment sold. And in this case, we're going to add $15,000, and then we can go on to the next one. So the next one here is we purchased a vehicle for $35,000 in cash. If we purchased a vehicle, cash would have to go out. So we're going to subtract cash. So we'll subtract purchased vehicle in the amount of $35,000. So remember, we said that if it's cash out or negative, we're going to put brackets to signify cash out. All right, next thing here we've got is purchased a copyright from Company Z for $10,000 in cash. So if we purchased it in cash, that means cash goes out. So we're going to subtract purchase copyright. And in this case, $10,000. So once we have that, then we have net cash provided by or used in investing activities. So we can add it all down. And if we add it all down, we still have a negative $30,000, which basically means that we've spent $30,000, or we had cash go out of $30,000 for investing activities, which is fine. I mean, we want to see that if we want to see a company grow and they're making the right investments in tangible and intangible assets. So this is probably a good thing. We can't really say it's a bad thing because we want this company to invest in these things. Now, if they're just buying just to buy it and they don't have any impact on revenues, then that could be a problem later on. But so we've got net cash provided by, and in this case, used in investing activities. So that's how we would prepare the investing section. Again, not too hard. Really, if you understand the transaction, what is going on, then this section is super easy to prepare. So what is going on? Take some time to sit down and ask yourself what's going on, and then prepare the section and you'll be golden. So hope you enjoyed this lesson. We'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or click in the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.